Good morning. This is Dylan Jovine behind the markets. Happy Thursday. Today's Thursday, April 23rd. And I'll tell you something. Big question that I've been asking myself lately is Berkshire Hathaway actually cheap? And I've been talking about semiconductor stocks and chips and the supply chain for so long. This is a bit of a thought experiment that I've been doing behind the scenes while that's been happening. I've been doing it at night. Now, many of you guys know that Warren Buffett is the great business teacher of my lifetime. I stumbled upon him after losing all my money on one trade. This is in my 20s. An analyst at the first firm I worked for told me go whole hog on a stock called Comtronics. I put everything I had into it at 22 bucks a share. I came into the office days later and I went to my Quotron. It was called the Quotron back then, and it opened up at 2 bucks a share. There was accounting fraud. And I thought to myself, oh my goodness, I lost everything on one trade in days. And I said, how do I avoid doing things like this? How do I learn that it shook me up so much that it pushed me on a line of asking questions, which led me to Warren Buffett. Who's the greatest investor to ever do this? How do we avoid this kind of stuff? And everything I do today is run through the things I learned spending decades reading his shareholder letters, really understanding the business analysis aspect of what we do. So anyway, Warren Buffett retired as CEO at the end of the year, last year, December. And I've been asking myself immediately, I've not been thinking about Berkshire Hathaway. I'm never going to look at Berkshire Hathaway again. But whenever I have an opinion like that, I force myself to come up with a counter argument. So I said, okay, what's the bull case for Berkshire Hathaway? Where is Berkshire Hathaway now that Buffett is gone? I don't even want to look at it because my hero is gone, but Greg Abel is running it now. Abel, I've heard it pronounced different ways. And I looked at Warren Buffett, and what I found surprised me, and I wanted to share it with you because it might surprise you also. Berkshire Hathaway might be a screaming buy, believe it or not. So the market cap for Berkshire Hathaway is $1 trillion. They're sitting on cash of $373 billion. They have an equity portfolio of $285 billion. So that means if we take that $1 trillion market cap and we subtract out their cash and we subtract out their stock holdings, their equity portfolio, American Express, Apple, Moody's, all those companies, what the market is saying is their entire business, their operating businesses, have an implied valuation of $340 billion. Now, what are those operating businesses? What does that actually mean? He owns BNSF Railroad, BHE, which is a utility and energy and renewables company. He owns Geico Car Insurance, famously. He owns a big reinsurance company, Everest and all these other ones. And MSR, which we put in the diversified kind of industrial consumer base. So I actually used 2025 results and after-tax earnings and a contribution to Berkshire Hathaway. And I did a sum of the parts calculation here to see if Berkshire Hathaway, if all of Buffett's businesses that he bought in whole, his operating businesses that Berkshire Hathaway owns, I wanted to see if the market was right or wrong on these businesses because they're being valued at $340 billion. Warren Buffett's life work, all the actual businesses he bought full ownership stakes that they own 100% is being valued at $340 billion. So I actually took out the old calculator and I ran some numbers. Well, BNSF, the railroad company, had $5.5 billion in after-tax earnings. That should be a $110 billion valuation at 20 times. BHE, the utility energy company, had $4 billion in after-tax earnings. That would imply a valuation of $80 billion. Geico had $5.4 billion in after-tax earnings. If it was valued at Progressive's level, it would be $59 billion. If BH Reinsurance and Primary, $6 billion in after-tax earnings, which, at about 10 times earnings, which is average for that group, is about $60 billion. MSR Group, the industrial one, $12 billion in after-tax earnings, times a 16 PE, we're talking about $190 billion. Pilot, NetJet, Home Services, and some other miscellaneous ones would be valued at $30 to $40 billion when you put together all their earnings. So basically, the sum of the parts valuation I came up with for Berkshire Hathaway for their operating businesses alone is $530 to $550 billion against an implied market value right now of $340 billion. That's a 35 to 40% discount to what you would pay if each of those operating businesses trade publicly at its peer multiple, the industry multiple. So it's really interesting. Now, the bet for those of you who own Berkshire, and I know some of you do, and I know some of us are considering buying it, Greg Abel, basically, he's been brought in as a guy who could actually improve operations. Warren Buffett is very hands-off, avoided conflict. Even if there were underperforming CEOs in place, he was conflict averse. But Greg Abel is a little bit different. So the question is, are these cheap? Yes. Can he improve operating margins? And that's what Greg is. He's an operating manager. He's the kind of guy that can get in the weeds and really understand how to move margins up at each of these businesses. So in my view, Berkshire Hathaway looks like one of the best cheap buys on the stock market today. I know it's not Tesla. I know it's not SpaceX. I know it's not fancy. But if I were buying a mutual fund, if I'm talking about safe mutual fund kind of money, I don't think there's a better stock-based mutual fund on the market right now than Berkshire Hathaway. I was surprised after doing this, and I ran the numbers multiple times, and I kept going through it and going through it and going through it. I was surprised to find this out, and I thought it'd be fun to share it with you. I think Berkshire Hathaway is better than any stock-based mutual fund right now, which also explains why Greg Bell, the CEO now, has put his whole salary into buying shares and why they're started stock buybacks again. Anyway, that's all I have. Have a wonderful day. I will see you tomorrow.